Welcome to the Michael Yardney podcast, where twice each week I chat with industry experts to give you insights and practical advice about property investment strategies. Today I'm joined by Alastair Lias, who's had an incredible depth of experience and knowledge about the property markets. Al's helped countless property investors turn their ambitions into reality, and in doing so, he's seen more than his fair share of mistakes that can set investors back. So today we're going to take a deep dive into the biggest blunders that he's seen property investors make. This is an episode you're going to want to listen to because we're going to lay bare some of the common traps, pitfalls, and the often overlooked aspects of property investment that can make or break your success. So without further ado, let's get into my chat with Alastair.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect, and pass on your wealth through strategic property and wealth advice. Now, here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
A recent report by the AHURI confirmed that around 50% of Australians who buy a property investment sell up in the first 5 years. Now, obviously they've done something wrong, and we know that those property investors who stay in the market, 78% of them never get past their first investment property. So what's going on? What are they doing wrong? How can you avoid these mistakes? That's what I'm going to ask Alastair Lias, Senior Property Strategist at Metropole, because he's had years of property market experience and he's seen it all. Hi, Al.
G'day, Michael. How are you today?
Good, thank you. Now, we speak all the time anyway, but you're new to this audience. So you're a property strategist at Metropole. You've been advising both beginning investors and many experienced investors how to safely grow their property portfolio, how to develop financial freedom, rather than be one of those statistics who only own one or two properties. But before we delve into the mistakes you've seen, because we'd like to help others prevent those mistakes, maybe tell us a bit about yourself, because I think if we ask people's opinions, we should know that they've got the perspective to give the right advice, Al.
That's exactly right. And I think probably that's more true now than ever. So, look, my background, Michael, I've been in the industry, property industry, since around 2001. I've had a lot of different roles, so I've got a lot of across-the-board industry knowledge. Obviously, a big part of that has been, on a personal level, a keen property investor as well. So I've been everything from running a large corporate real estate franchise, a selling agent, a buying agent, and really my true passion and what I've been doing for the last few years particularly is working directly with property investors and sharing my experience with them and obviously helping them, as you said before, avoiding mistakes. And that's something I'm very passionate about now. And I wish I knew then what I know now. I'd probably, like a lot of people, be in a very different position.
Who would have not liked to know all this information? Now, I guess though, one of the troubles, Al, is there's too much information out there as well. So you've got to be careful whose advice you take. There's a lot of newcomers to the industry who did well during the boom, but anyone could have done well during that boom of 2020, 21, and they're now experts on social media selling their secrets about how to build a substantial property portfolio, buy 10 properties in 10 minutes. So maybe we should just have a talk about who one can ask advice from, because you've got to make sure that you know whose side they're on. So you've been an estate agent, you haven't been a property marketer, you've been a buyer's agent, a property strategist. So there are these various people. Estate agents work for the vendors. That's their job. So they're not on your side, even though they want to get a deal done. The property marketers, sometimes they cover themselves up and pretend that they're actually giving advice, but they're really, their job is to sell product for the developers. Lots of buyer's agents out there, some very good experienced ones, and some who unfortunately, well, not unfortunately, but they're starting their journey. Just recently I saw a really interesting post on Instagram which said hiring one of those new buyer's agents to buy your investment property is a bit like handing the keys to your Porsche to a P-plater. And then there's property strategists, and there's actually, in my mind, very few what I'd call real property strategists. Many give advice, but most of these people really aren't on your side. They can't give holistic advice. So who should people be asking for advice, Al?
Yeah, look, excellent point. And I think it's probably far more apparent now more than I think it ever has been, off the back of the pandemic and the amount of people that I speak to, and they're very confident in the advice they're given. Now, whether it's because they truly believe it or they've got such a vested interest that they've actually got a great story to sell, that is something very passionate about. Obviously, being in the industry a long time, it's very easy for people like you and I to see past that and really get to the truth of the matter at the end of the day. So it's about understanding the right sort of people and who have got the vested interest, who haven't. That are the questions you need to be asking. And I think probably one of the big things there is once you delve under the surface and you ask the right sort of questions, you get to understand the people that you can trust. Trust is a massive thing within this and something I'm extremely passionate about, because that really is truly working in somebody's corner. We tend to avoid anything that we see there's going to be any conflict of interest. So off the plan sales, house and land packages, giving general advice that's not built on a very strong framework. And this is something you've obviously developed over the years, Michael, and I picked up on extremely quickly when I joined, because it made complete sense that if you're going to have a very strong strategy that's going to work for the client, you can be asking people the question, what is your framework that is going to actually get me the best result? And that's something I know we can prove. And I really sort of challenge people to ask. If you're speaking to people, challenge them with that question.
Well, it's got to be able to provide long-term success in all markets. And the frameworks that we deliver at Metropole are frameworks I've fine-tuned and improved and changed over 50 years, over 5 decades. We've been helping clients with for over 20 years. So I guess when you think about who you can ask advice of, I think many investors, beginning investors in particular, don't ask anybody. They think they understand the market. They've watched a few YouTube videos, they've read some blogs, they've listened to podcasts. But in most other areas, we ask people advice. If you want fantastic photos of your wedding, you get a professional photographer to help you. Costs you money, but it's better than your friends taking photos with their iPhones. If you're not handy around the house, and even if you are handy around the house, you're likely to pay a plumber to fix your leaking toilet. But when it comes to buying real estate, whether it's the home to live in or an investment property, people seem less inclined to turn to somebody for advice. Maybe because they think they know how to do it themselves, Al.
Yeah, absolutely, Michael. Look, because I live and breathe property. This is what we do day in, day out. And I think that's what people don't understand. When you see a lot of weekend warriors that, they might listen to a podcast, maybe scroll through realestate.com.au, have a bit of a look there, and they believe that's research. There is so much more perspective to bring to this and understanding the data and what does that actually mean? And one of the biggest mistakes I see people make is not just personally when they're doing it themselves, but when they're engaging what they think is a professional, they're giving them examples of the last 2 to 3 years, and then they're projecting what's going to happen in the next 2 to 3 years. That, I think, is a major red flag. So many times, I spend a lot of time fixing other people's issues. That's not as enjoyable. What I love to do is avoid those issues. Just the other day, Michael, for a live example, I was speaking to a person, he's sort of in his 40s, not a great deal of super because relatively new to the country, that he was actually being assisted to purchase a property in Rockhampton. And the reasoning for that was simply based on the fact that, number one, he could afford that area, and number two, that it was going to go particularly well for the next 2 to 3 years. Now, you and I both know we could probably find 500 different places across Australia where we can get that same result for the next 2 to 3 years. Really bring it back to the core and showing an example of, well, how has that suburb performed over the last 30 years? And then comparing it to a more of an A-grade investment asset area that we would see, let's say, in inner city Brisbane, Melbourne or Sydney, and really showing that suburb's tripled in median value over those 3 decades, whereas the suburbs that we would suggest we look at have gone from, they've done that and they've done that 3 times over. And there's really good reasoning behind that. It's understanding how that actually works as well.
So maybe it's worth understanding what a property strategist would do. So a lot of buyer's agents say, I'll do a strategy for you, but our strategies are written, documented, sometimes 50 pages, more likely 70 to 80 pages, giving a number of different options. Because what we work out is where people are now, where they want to be in the future, and there's a number of ways you can get there. You're in Brisbane, Al, I'm in Melbourne. If I put into my Google map on my phone how to get to Brisbane, there are 3 or 4 different routes I could get. I guess I could go by plane, I could go by car, I could take the inland highway, I could take the long route, I could stop off along the way. And some of our clients do want to stop off along the way. They want to have a baby, they want to go overseas, they don't want to buy their home yet, they want to buy an investment. So there's not one route to get there. So many of our plans offer options, and then we have to fine tune and get down to the right journey, the right pathway for them. So in my mind, a good property strategist works out what their clients' hopes are, what their fears are, and helps them achieve their long-term goals. It actually makes things more simple. Looks like there's a million things to know, but you mentioned the word perspective a while ago. I think that's something that money can't buy. We also like to develop a long-term relationship. Now, this sounds like a big promotion for Metropole. It's not. There are other good professionals out there as well. It's a promotion, a recommendation to get somebody to give you specific, personalized advice, not sell you something out of their stock list or only in their backyard where they can buy something. So you've got a good strategist will give proven strategies that have always worked. They'll offer opportunities to make the highest and best use of your money, but they're also going to help you avoid mistakes because they've seen the landmines before and give you realism and insights rather than promise things that don't work, and actually regularly assess your portfolio. But I think there's a couple of things that a good property advisor can't do, Al. Maybe you could actually just go through a couple of things that people may expect from you and can't do. Now, some people will suggest they can do that because they actually don't do all those good things I said a good advisor does do.
Yeah, look, at the end of the day, there's lots that we can control, and this is where really great insight comes into it, and just understanding. And the great thing about working with a company like Metropole is that if I don't know something, there will definitely be someone around that does. And that for me is when we work with people, it's really important we're building that team around us. So we're giving our clients the absolute best opportunity to succeed. Everyone's got their limits as what they can actually do. So, as much as we can do, as much as we can forecast, we can obviously make sure these strategies as we go, as we walk through these strategies for the entire life of the strategy with our clients to make sure they've got the best chance. Some things we can't control. We can't control. Governments is a really good example. This is why we're always very cautious once we're modelling things out. We're always making sure that we're taking into as much as we can to do this safely. There's always going to be that buffer there. We see it at the moment in the news. People are reading about what's happening in Victoria, other proposed things. So we do give all of our clients the absolute best opportunity to not just hit their goal, but definitely exceed it where we can. And as much as we can do, as much as we can see, there is obviously things we can't do. Now, even a great property advisor cannot predict the future. It's not something they'll be able to tell you how the market's going to perform, what will happen with interest rates, or what capital growth rate a particular property will achieve. That's just not something that is able to be achieved all of the time.
So don't be disappointed if you don't get that advice. But that's what people come along and hope that we're going to do. If somebody tells you that, run away pretty quickly, mate.
Totally right. Couldn't agree more, Michael. There's a lot of I've heard a lot of claims that people will put out there, and you do have to certainly wonder and see the red flags go up. Something else we can't do. So, a great property advisor still won't be able to find, the next hotspot for you. Yet so many called advisors suggest that, hey, we know the next hotspot. We can tell you when it's coming up. Get into the market first.
I guess what they're doing is giving their potential clients something that they want rather than what they need, which is solid, sound advice. I guess they're selling tickets to unicorns. There is no such thing.
Yeah, absolutely right. Again, we do see a lot of that as well. So, look, even the most qualified advisors won't be able to pick the best time to purchase an investment property. I mean, we can run off all the data in the world, but, other than to remind you that the best time to invest was 20 years ago. So, the second best time is today.
Yeah. And I guess a good advisor is not going to be able to get rich quickly. That's an extraordinary achievement that just doesn't happen. There are no shortcuts. So free advice could cost you a fortune. In fact, I guess the most expensive advice is free advice that isn't the right advice for you. And considering that half the investors, as I said right at the beginning, sell up within the first 5 years and others never get past their first or second property, I guess we've got to accept the fact that be careful. You shouldn't listen to the same advice a lot of other people are, because there's a learning fee that comes with being in the market. Either you pay the learning fee to the market or you pay a trusted advisor who'll save you paying the learning fee to the market. The common learning fees I see people making are buying the wrong asset, not owning the right investment grade asset, one that outperforms, one that grows significantly, means investors miss out on the significant capital growth. Yeah, they may get some cash flow, but you're never going to build a big enough asset base to have choices. Another big mistake they do is overpay for the property, not having the right knowledge, not understanding what's going on. There's a lot of buyers agents who fly in, fly out, and there's actually a whole heap now, Alastair, who don't even go and inspect the property. What do you think of those who get a property manager to do it, or a building and pest inspection person to look at the property because they can't be bothered flying there?
Yeah, look, I mean, aren't you missing out on so much opportunity, I think, when that you have a look at that? And I did see someone the other day actually made that very claim on LinkedIn, it was, where saying, hey, listen, we're property buyers, and it doesn't matter if we can't be there to inspect the property because we've got such insight now in the technology that we can help you find the right property in the right area and negotiate it without actually being there as well. And I've come across that a lot. Now, that to me, again, is a big risk because, there's nothing more important than having the right person on the ground that understands the area, that understands the market, that has the right network in the area. That just goes so much further. And experience it myself as a property buyer. It's to make a claim that you can do the same sitting behind a desk in Sydney is next to ludicrous, Michael, in my book.
It really is. Now, sometimes it's really obvious. I mean, there's some beautiful streets in Sydney where on one side of the street there's a lovely house with views of the Sydney Opera House and the water, and on the other side of the street there's the house with the views of the house that's got lovely views of the Sydney Opera House and the water, and there's a big differential. But in other streets, it's not as obvious as that. But local buyers agents who know the turf, who've been selling agents before, will know why one end of the street sells better than the other, or why one side of the street sells better than the other. In Brisbane in particular, there's often a slope. Melbourne's a much flatter area, but Sydney and Brisbane, if you buy one side of the street, the water's going to flow from the street into your house, and the other side of the street, it's going to not flow into it. Things like that. And I'm not talking necessarily even about floodplains or things like that. That's the sort of thing that getting a local building and pest inspection or property manager, they'll be able to tell you if it could rent properly, but they don't understand what an investment grade property is. So when we looked at the mistakes people are making, buying the wrong property, overpaying, or sometimes actually not making a decision, in other words, procrastinating. On the other hand, those who've got a strategic advisor who's guided them, they're more likely to do well. Before we go on to some of the mistakes, I've got sidetracked a bit here because I am passionate about people getting the right advice, more importantly, not getting the right advice. I think one of the first questions you should be asking advisors, Alastair, is how do you get paid? That's going to reveal a lot, isn't it?
Look, it absolutely will, and I think it's a critical question you definitely need to be asking people. And it's almost heartbreaking when you look back at before the GFC and people were buying properties up in Gladstone and so forth. They'll go to seminars and they were being told how wonderful these things were going to work for them, was going to secure their retirement and do so much for their superannuation. And little did they know that the people that were selling these things, number one, a great strategist is not going to have a property in their top drawer to sell you at the end of the day because everyone is so different. It has to be very bespoke to their situation. In this case, you were going to a seminar and these people were getting paid by developers at the end of the day. They were simply marketing people that had a great story to sell. We know where that's ended up now. The amount of people that unfortunately went bankrupt, they went all through all sort of pain. So a very, very important question to be asking anyone, who is remunerating you? Because that will tell you, are these people truly, truly working in my corner?
Makes a lot of sense. So I started off by saying we're going to talk about mistakes people make, so maybe we should get into that. What are some of the biggest risks you're finding people having when they're choosing a buyer's agent or a property strategist? What are the mistakes they're making?
Yeah, I think number one, it's a couple of different things there. Number one, you touched on it before, Michael, that if you're going to have a great property strategist that will really steer you through that journey and give you the absolute best strategy based on your personal situation, it's not free. There will be a fee that comes with a service fee, but you're paying to actually get great value and great advice. I think that the biggest issue that people actually make is talking to the wrong people. Some people giving advice, either they've got bias towards their own interest, or they may truly believe their solution is the best solution. But once they put it to the comparative test, it actually fails to deliver the ideal outcome. And this is what we love to always talk about, is the ideal outcome for clients. What does that look like? How do we build it from there? So the people that you're getting advice from, they may be professionals in a field or have just got a keen interest in property, but they really lack how to prove how they'll actually bring long-term success. Any good strategist should be able to deliver proven results in different geographic locations that offer A-grade investment qualities. So these are always going to be established areas, capital cities, high demand, low supply, with great land-to-asset ratios. So really avoid the spin of things like new apartments, house and land packages. Just be very cautious about who you're getting your information from. Michael, again, I live and breathe property as you do. I spend a lot of time on social media channels, where Facebook, Reddit. People go there to get their property advice. It's terrible, some of the feedback that I actually see, and so-called experts. It's you would shake your head and say that is just the worst advice you can give someone, particularly a younger person who's starting out, or an older person that can't afford to get it wrong anymore.
You're right. Okay, what investment traps do you find people are making that they should avoid? How would you help investors fix these sort of issues?
Yeah, look, I've just sort of touched on before too, Michael, that there's two ways that for some people, the more enjoyable part of this is avoiding the traps for a start. For other people, it may have made the issue that they've fallen into a trap as well. So they might have bought an apartment. You can sort of look back in 2009, 2010 in Brisbane, where there was a lot of people buying apartments because, that was the thing to do. The message was out there. It was going to be a great investment. There was, obviously a lot of supply and low demand. You could probably have bought one good house in Brisbane in 2017. That probably would have outperformed the 3 apartments you bought in 2010. That really shows the right property at the right time and understanding what is going to stand the test of time to give you really great compound growth. So, looking at good established areas, don't go to people that are order takers. You're telling them, I've got this sort of money, what should I do? They're going to take your order. This is where a great property strategist is going to say, let's have a look at your options. Let's explore them. Let's show you your options. So when you make a decision, it will be a managed decision. And that's really how, number one, we avoid risk. Number two, we then give people the solution to fix the problems that they may have by giving them 2 to 3 options. And they understand the weight of their decision, the decision they make today, how is that going to affect them at the end of their strategy.
Interestingly, you mentioned a moment ago, be careful who you get advice from because they've all got their own agenda. I remember a couple of months ago, I was speaking to somebody who was planning to come to Wealth Retreat, and I didn't tell them what they wanted to hear. And so, interestingly, they didn't come when they would have got a lot of benefit. But they lived in regional northern Queensland. They owned one commercial property, and they went to a large buyer's agency who recommended them they buy a second commercial property because that's all this buyer's agency sold. Now, we believe commercial property is an important part of the mix for successful investors, but they weren't told that commercial property in general goes up by the CPI based on yields. It was the wrong game for them at their stage of their journey. But it's just like if you go to a buyer's agent in Perth, they're not going to tell you to buy on the East Coast, even though I know we actually have bought a lot of properties for people from Perth, including a couple of property professionals from Perth. Sorry, I may be not making the point correctly, but if all Perth buyer's agents sell at Perth properties, they're not going to tell you to go to the East Coast. If all buyer's agents sells you or service that they buy is commercial property, they're not going to tell you that it's the wrong game for you at your stage of the journey. So it's important to understand where you are, what your aim are. Are you at the stage where you're still growing your asset base and then commercial may not be for you? Is it the stage where you're starting to lower your loan to value ratio and converting more to cash flow? Then commercial could be the right thing for you. There's other buyers agents out there who say, proudly, I've never bought in a capital city. I'm not biased. I can buy in any of the other regional towns around Australia. On the one hand, they say they're not biased, but they must be if they've never ever bought in a capital city. So just be careful about what their business model is.
Yeah, totally agree. And I think this is when I'd like to take people through again, showing them a little bit of substance and showing them how we actually build out that journey and sort of explaining a little bit more. And I do actually do that with clients and sort of say, look, every journey is a little bit different. Maybe yours looks a little bit like this. You're looking at your investment, your principal place of resident. Then later on down the track, it's all about, paying down the debt. And really that's when you're putting your industrial, commercial properties in the mix as well. And I see a little light bulb moment when you actually go through that with people and they sort of go, oh, okay, this actually now makes a lot more sense. And I think that I'm an absolute classic for getting this wrong back in the day as well by not having that process involved with my own strategy. I spoke to somebody else, Michael, the other day. They own over 30 properties. Sounds great, but, one state, there's certain sorts of properties and they're all over the place. So I've had a significant portfolio in the past, and I've reduced that based on the fact that it was the wrong properties and there was too many of them. It was a full-time job. It was just sort of not needed there. But you change one thing in that state with one tax law, that person's going to be in all sorts of trouble, and we had that discussion.
It's not how many properties you own. I'd rather own one Westfield shopping centre than 50 properties in regional Australia. It's the quality of your property, the return they get, and how hard your money works for you. So how many properties you own is in many ways a vanity metric. I'd rather own, well, it's important to own quality properties. Now, I also heard you say that you like your property investing to be boring. Why do you say that?
Look, I started investing in my early 20s, so obviously I was quite young. I worked extremely hard. There was no hand-me-downs from the parents, so I probably should have been a little bit smarter about the way I spent my money. So a lot of that was then around really going out, and I didn't quite understand. Like a lot of people at the moment, they actually think that they do understand. I thought that being a very successful investor was accumulating as much property as you can as quickly as you could. You've seen that for many decades.
I was there too. I agree.
Yeah, absolutely. And that was my mistake. Look, I was pretty proud of the fact that I walk in halfway through an auction and thought, oh, that sounds pretty cheap, and put my hand up and buy it. Sounds great. But then again, having the wisdom today, it's thinking, if I had have made a better decision, what would that have done over the next 2 to 3 decades? It would have put me in an extremely different position, a far better position. So when we talk about our strategy and our framework, it almost seems boring because we're not out at open homes every weekend. We're not doing, looking at auctions and that sort of. We don't need to. We understand the process. We understand the strategy. We understand the timeline, the right sort of properties at the right time, and then it's basically it's not that accumulation of a lot of properties. It's getting the right properties that are going to give you the best result.
Well, property investment is a process. It's not an event. And significant wealth through property takes at least 2 decades, maybe 3 to accumulate. It's not a get-rich-quick scheme. Yeah, sometimes you luck out. Sometimes you get a free kick and you get a property boom like we had a couple of years ago. But in general, it takes quite some time. And the properties you eventually buy should be, in my mind, the physical manifestation of a whole lot of decisions you make, and you make in the right order. So I agree with you. Property investment should be boring. Our system is too simple for some intelligent people. They come along and say, no, there must be something more to that. You're missing something. You're not telling me something. No, it's tried and tested and it's worked. And so we don't look at the next hotspot or what's working now. We look at things that have always worked. Now, again, I mentioned a moment ago that we're all playing different games. So I bet when you sit with clients, what their age is and where they are in their journey would make a difference as to how you'd advise them.
Absolutely. And I think that now that I've got the advantage of a bit of age on my side, it's a lot easier then to really get familiar with people's personal situations, having been that made the mistakes when I was younger. And then, Michael, you have to remind me of the term, was it the strategic replacement of assets, I think it might be, aka divorce?
The asset reallocation program that happens when you go through your divorce, as has happened to me as well as you.
Yeah, absolutely. And I think really then it's working with younger people. The great joy about working with younger people, obviously, is leading through. They've got such an opportunity to get this right from the start. That's a really, really big thing, that to avoid that risk, make that investment in themselves. And a lot of them are very keen, and they obviously come to us. They've listened to your podcast and a lot of other people's podcasts. And I love to run through the journey with them just to declutter, the information that they've got. And I think that one of my greatest joys with a young person, even an older person, is that once we finish the conversation, one of the greatest rewards for me is they say, I feel so much better after that conversation and speaking with you. You made it a lot clearer, a lot more simple, and very much to the point.
Yeah, that's actually really good when it happens, Al. Unfortunately, I've found a lot of people have what we call confirmation bias. They come along wanting advice to confirm a decision they've already made. And I bet at times you annoy people by saying, no, actually, that's not the way it works.
Very much so. And look, you're not going to gain anything by telling someone they really want to hear. Again, we do this day in, day out. And, if we, which we do, have people's best interests at heart, we're better off actually being very upfront with people, because if we're not, they're not avoiding mistakes. And, sometimes I've actually helped people avoid some very costly mistakes because they've already started to go down that rabbit hole that is, potentially some of the advice out there within the property investing world.
Unfortunately, there's so much information out there that information is no longer the big leverage point that it was when you and I started. Nowadays, you can get all the data on the internet, most of it for free. I think the big benefit that you bring, that you've mentioned a couple of times, but if I could bring it out again, is the perspective, the fact that you've been there. And also, let's be blunt, you've made mistakes, I've made mistakes. We've also seen other people make mistakes. So that's the sort of advisor you want, somebody who knows what not to do and can actually decode all the information that's out there.
Yeah, absolutely. And we sort of touched on age a minute ago, and I think this is very, very important for older people that may be a little bit further down their track, because they haven't got the same time period they can to achieve potentially what they could have achieved, a decade or 2 decades before. So that's a really critical stage for people to be getting the right advice. If they're not getting the right advice, then they can't do what I did when I was young and make up for it. You can't do that turnaround. Once you go through divorce, you lose a lot of property. And I realised that. It was a bit light bulb moment for me. It was like, I can get to where I need to be. I can generate some really great wealth off property. I can't now get it wrong. I can't walk in halfway through an auction and put my hand up. I need the right people on my side, in my team, that are going to give me the right advice. And even though I'd been in property for a long time, that's when I started to really understand the real metrics of and what it means to be a great property investor, and understanding that it is a process and having the right people on your side. And I'm very blessed, obviously, working with some great industry figures as far as that goes. And I love to help older people avoid those mistakes and show them what is actually achievable. They still don't know. And that's
I want to ask you a couple more questions, but before I do, I just want to point out that I'll leave a link in the show notes. And if you want to see Alastair Lias or the team at Metropole, we're much more than buyer's agents. We actually help you safely grow your wealth, protect it, and pass it on to future generations. Why I say safely is because of all these things Al's already been discussing with you. And at the moment, if you're wondering, well, is it the right time? There's all the stuff in the news at the moment. Maybe interest rates will go up again. Maybe we will have problems with extra legislation that is on the tenant side. Remember all those things you worried about 12 months ago? Did they actually happen? Remember those things you worried about 2-3 years ago? Did they actually eventuate? So rather than worrying about all the things that could go wrong, let's look at things that have always worked. And that's the sort of advice you're going to get when you sit down with Alastair, who's going to help give you the perspective of having invested through a number of decades now and understanding all those things. So if there's something we could ask you to finish off, Al, with all this perspective and experience, what's the one thing you would tell your younger self? What would you teach your younger self? Because you said you would have liked not to make those mistakes. What would you say?
Pretty much what I speak to a lot of the younger people that come to us already, and that is, you have time, and you've got time to actually stop. And a lot of the things, I suppose, we're very different as a company when we're actually working with clients. And what actually surprises people sometimes, that because we're not order takers, if we think it's in their best interest to wait, to look at the process, and if buying right now is not the right thing on their situation and waiting 6 months is the right thing to do. I gave this advice to someone the other day. He came along, he was 18 years old. His parents giving him a deposit for a house. He thought he had to buy this year. He thought he had to get in the market. Once we actually looked into his situation a little bit, that definitely wasn't his best option. And I think having somebody who's at least got the right advice, and I think that if I could tell something to my younger self, is find the right person. Something that Brett, that I work with here, is one of our directors in the company, says quite a bit. You don't need to know everything. You just need to know the people that actually do. And that's very, very true in any industry. And I wish I had have known that back then, that when I first started making really important decisions, I wish I had different mentors in my life. I never had a property mentor until it was probably, later on down the track. I would have been in a very different position. So get that right mentor, get that sort of right advice, because it will make a huge difference later on down the track.
Now, just to finish off again, yes, it sounds like one big promotion for you, for Metropole. On the other hand, I hope you, as a listener, have understood the theme behind this. We actually shake our heads when we see people make wrong decisions. We're doing this because we actually do like to help see people have great successes. At the stage of life I'm at now, getting an extra deal, getting a couple of extra dollars isn't going to change my life. But when somebody sends me an email and says, hey, Michael, that recommendation you made a couple of years ago, look where I am now, I've bought my next property, or hey, that home that your team bought for me, my heart still sings every time I come home, my eyes light up as I drive down the street. That actually makes my day. And I know, Al, I'm really pleased that you're an important part of the team as a senior strategist, because you've got the client's best interest at heart as well. I think that's one of the big differences that we can bring to the party.
Yeah, I totally think that is, Michael. And you and I both know when I first started working with you, you made it very clear on the ethics and the values that this company runs on. And my comment back to you was I wouldn't be here if it was otherwise. And that to me is very important. You don't get to where I'm at, where you're at in this industry, unless you are doing the right thing by people. And yeah, absolutely. Very passionate about that for sure. Trust is a massive thing, and I always take that very, very importantly.
Well, fantastic. Thank you for bringing your perspective to the chat today. I had a lot of fun, and I'm sure that our listeners would have got some benefit from it. So I look forward to having you back on the Michael Yardney podcast again real soon. Thank you very much for your time, Alastair Lias, Senior Property Strategist at Metropole.
Great, Michael. Thank you so much, and thank you, listeners. Cheers.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to share with you a provocative quote by the late actor and humanitarian Hugh O'Brien. And when I read it, I actually had to look at it twice, because he said, people are not created equal. He said, I don't believe all people are born equal. He said, created equal in the eyes of God, yes, but physical and emotional differences, parental guidelines, varying environment, being in the right place at the right time, all these play a role in enhancing or limiting an individual's development. And he's right. He went on to say, but I do believe every man and woman, if given the opportunity and encouragement to recognise their potential, regardless of their background, has got the freedom to choose in our world. Will an individual be a taker or a giver in life? Will that person be satisfied merely to exist or seek a meaningful purpose? Will he or she dare to dream the impossible dream? And he finished off by saying, I believe every person is created as the steward of his or her own destiny, with great power for a specific purpose, to share with others through service a reverence for life in the spirit of love. Well, interesting thoughts. So, no, we're not all born equal, but if you're listening to this in Australia or one of the other great countries that a lot of people listen to this podcast in, you've already won the lottery in life. You've won the lottery by being born at this time. Now, I know there are a lot of challenges going on in the world and probably in your life personally, but you have the opportunity, as Hugh O'Brien said, to decide your destiny. You're the steward of your future. So be the pilot of your life. Don't be a passenger just going on a ride. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?